folks. Good morning, mate, says Mr. Ashutosh Bhandekar. Good morning, Mr. Bhandekar. Can you hear me? Is it good? Should we begin? The show that we deserve. I got good stuff for you. I got good stuff for you, folks. The best thing ever. It'll set you up, it'll inform you, it'll inspire you, it'll, engage you in a very stimulative way, and it'll jack you up. So, Mr. Bhandekar says yes. Perfect. So, let's begin. Let's begin the show that we deserve. You got the beverage, right? The beverage piece is very important. Do not start without a beverage. Get the beverage, get the good luck coming, and then we will begin the show that we deserve. The show that we deserve. Bum 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 bum. Good morning, everybody. Welcome to Thinker's Frequency. We're having such a good time. This is the peak of human civilization. We're working so hard, doing such good work for ourselves, our parents, our kids, our siblings, our husbands, our wives, our friends, everybody. Well, not other people's husbands and wives, I hope. And just when we thought things couldn't get any better, like they couldn't possibly get any better, well, they just did. Call it divine intervention, folks, but things just got a whole lot better. Now we have Thinker's Frequency, our daily mental workout, our daily dose of insights and analysis which don't lead to paralysis right before we punch in. So let's continue with our journey of reading between the lines, things that are especially interesting and important in the world of business and finance. Let's go! But before we go, we've got to follow a tradition, right? You know the tradition. You know the sweet and sacred tradition of the simultaneous sip. We'll all sip something together and bring us good luck, as it always does, without fail, every day. And all you need for the simultaneous sip is a cup or mug, a glass, a tank, a chalice, a stein, a canteen jug, a flask, or a vessel of any kind. Pour it with your favorite liquid. I like some hot water with black pepper in it. And here we go. Beautiful. Let's do it again. Sublime. Sublime. Healing. I'll do it again. I just can't stop. Beautiful. You know what the simultaneous sip says, right? You know what it says? It says that you are not alone. It says that we are in this together. It's such a beautiful thing to say. With that out of the way, let's begin. The big news is out, folks. The big news is out. Lenskart's IPO is finalized. It's gonna go with an $8 billion valuation. $8 billion. Earlier it was going at a $10 billion valuation. And looking at that $10 billion valuation, I had written a huge article saying that how and why Lenskart is extremely overvalued, and this particular IPO is akin to, a loot, essentially. They were really trying to milk the cow till it's dry, kind of a situation. They were really going out of the way to take everybody's money, which wasn't nice. So, and what's worthy of being mentioned is that the entire internet, they didn't bat an eye. So everybody was very cool with Lenskart's $10 billion valuation until I wrote about it. Okay. So, in fact, if after I wrote that huge ass piece, a lot of publications came in support of Lenskart's valuation, saying that while there is chatter that Lenskart is overvalued, we believe that Lenskart deserves the valuation of $10 billion. Okay, so that was where all the publications stood, and we were there having this very clear view that it is grossly overvalued. What we said was Lenskart's fair valuation is about 4.5 to $6 billion, right? 4.5 to $6 billion is was our range, and we based that range on fundamentals. It was a fundamental call. We looked at Lenskart, we looked at its scale, we looked at its profitability profile, we looked at its growth prospects, we looked at its marketing spend, we looked at the kind of operation it is. Then we compared it with global competitors, people who are doing a similar business across the world, right? We compared Lenskart with, let's say, Warby Parker, right, which is a D2C first asset light brand as compared to Lenskart's heavy retail kind of an operation. We compared it to ArcelorLuxottica, right, the Ray-Ban, Oakley's guys. We looked at their operation, their growth rate, their scale, their future prospects. ArcelorLuxottica has tied up with Meta. Meta is a direct stakeholder in ArcelorLuxottica because of the whole glasses thing. We checked them out. We've tried to find India's comparators. We found out that there's no listed peer of Lenskart. But then we looked at Titan Eye Care Plus, right? And while it was a smaller operation, 1100 crores, we found out, let's look at Titan, which is a 10x player as far as scale is considered. And despite that 10x scale, Titan has grown at a much faster. It's like growing at double the speed of Lenskart. So Lenskart is growing like a usual mature retail operator, some 18% or something, or 17% or 11 to 17%. I'm not remembering the correct figures right now. But Titan grew at 38%. Even then, Titan's revenue multiple is 6. How is Lenskart's revenue multiple at, let's say 15x? That's what they were looking at, 15 or 16. So it was grossly overvalued then. It is still overvalued, by the way. So now that our article has shaved off, it was just one article. So one article worth $2 billion. So it's definitely the most consequential piece that I wrote, right? Because I wrote something which actually led to something. Otherwise, it's just intellectual masturbation, right? When you're writing articles, what are they for? They're just like, oh, nice, I read something, It helps you think everything, but it's not consequential. So this was directly consequential. So Lenskart's, my article got viewed by everybody across the board, all the finance guys, the debt equity guys, even Avendus MD, the people who were basically writing Lenskart's IPO, people behind Lenskart's IPO, they added me on LinkedIn basis that article's going viral. So that is definitely a very consequential piece. $2 billion. That's the value of article. 16,000 crores. In fact, not 16,000, now 18,000 crores, essentially. So that one article was worth 18,000 crores. How much would I have been happy with? Well, some 180 crores. I would have been happy with 180. But anyway, so what is the prediction now? This is still a very overvalued company, right? But the downside risk has sort of capped. What is the downside risk now? Now the downside risk is of 30 to 40%, right? 30 to 40%. That's the downside risk, essentially. So if the markets crash tomorrow, if something bad happens to the market tomorrow, what are you going to look at is Lenskart going from an 8 billion play to, let's say, 5.5 to $6 billion. So that is essentially 35-40%, right? So that's what the money, that's what a person can lose. And that's where we are standing at the moment, which is great, right? A lot of people actually went out of the way and donated me money after reading that Lenskart article, which was amazing. Somebody, like, people actually donated 20,000 rupees. Some guy donated 10,000 rupees, 25,000 rupees, and so, because they found it so consequential, which is great, which is absolutely amazing, right? So some comments. भाई आपकी टिनिटस ठीक हो गई क्या पूरा? भाई आई हैव अपलोडेड अ वीडियो, आप उसे देखें. उस वीडियो में सारे टिनिटस के बारे में इंफॉर्मेशन है. ये टिनिटस के लिए सेशन नहीं है, सॉरी अबाउट दिस. Mr. Pure Sethi writes, articles for us readers are very important, not enough sources of information that are biased. We appreciate it. Thank you, Mr. Pure Sethi. Mr. Vaibhav Manocha has a fire thing, and he writes, help us to be able to do the analysis ourselves in context of the Lenskart article. Well, that's exactly what I was coming to, Mr. Manocha. So that's what I want to do, because I can't do this regularly, right? I can't do this regularly. What I want to do is, I want to put it out there so viewers of Thinkers Frequency can do this themselves, and then we can have this show, right? We can bring, like, viewers of Thinkers Frequency in a segment, like a TV segment, and then we could discuss those in-depth companies which are interesting. And I can't do this myself because I have a paucity of time, but you could, right? Somebody could take out some time, and then we could cover a whole bunch of companies. So here it is. Okay, when you're looking at a company, okay, let's say Lenskart, what are you looking at is the company's core operation, the kind of operation Lenskart is. Now, Lenskart wants to position itself as a tech company because tech companies have a higher growth rate, higher profitability profile, even if those profits are deferred in the future, right? So tech companies lose a bit of money in the beginning, and then they start turning the corner, but they grow very fast, and they have a way to grow exponentially. So that's the beauty of tech company. It's basically printing money if you start growing, and if you've basically proven yourself. So what is the type of the company? So Lenskart is not a tech company, right? It's a manufacturing play, it's a retail play. So retail play is a slow moving, mature, scaled, right? If not a commodity operation, somewhere close to, not really something that is extremely well differentiated. So the price parity, there's no price control as far as the company is concerned. So you judge the type of the company. Okay, that's the first step. Then you look at the profitability profile. What has Lenskart's net been, right? Don't look at EBITDA. Don't look at, whatever that is. EBITDA is bullshit, right? So Mr. Charlie Munger said, whenever I read EBITDA earnings, I call them bullshit earnings, and that's true. Never, if you find out somebody's reporting adjusted EBITDA, run away, spit and run away, right? So that is adjusted EBITDA. You look at net. So if net is not available because net is a problem, you look at gross. Okay, gross margins, net margins. These are the two things. Then you also look at the markets the company has, right? You look at India, you look at where is this company growing. So the industry, the kind of profitability profile, the growth rate, okay? These are the types, these are the first few things that you look at, right? This gives you an idea about the company and how green it is or will be in the future. Once you've done that, now you start looking at other companies related to this particular play. Okay, so if you look at Lenskart, there are Warby Parker is a very, very close peer of Lenskart, but Warby Parker is asset light, so it doesn't have its own stores. It has retail partnerships, and it is a D2C first play. Okay, so Warby Parker is a very close play. And then you look at how they are valued. So how are companies valued? Companies are valued at price to earnings or price to sales. Price to sales is basically revenue multiple. It's very simple. Finance guys try to complicate this. Look at the revenue multiple. Look at the earnings multiple. Okay, sometimes earnings multiple is not possible because the company is not profitable, or the company is barely profitable, or the company is just new. So there's no point of looking at earnings because the company is new. But if the company is old, you should look at earnings as well. But anyway, you look at revenue multiple, which is a very easy sell because no matter how new or how immature, or let's say formative stage the company is at, uh, it still makes revenue, right? So you look at revenue multiple, and then you look at, of course, you look at debt, you look at the cash in hand, you look at growth prospects, you look at whatever, but you look at the revenue multiple, and then you compare Lenskart with revenue multiples of other companies. Okay, you look at the West, you look at East, you look at Japan, you look at Western economies, you look at Indian peers. Revenue multiple. So if you're being able to look at the revenue multiple, you're gonna find out, oh, okay, Lenskart did revenues of 5,000 crores. It's now looking at a valuation of $10 billion, which is about 90,000 crores. So that means Lenskart's revenue multiple is 90,000 divided by 5, right? Which is essentially 14, if I'm not wrong. No, 18, right? Something of that sort. So that is huge. You look at what revenue multiple Warby Parker has. It's basically 2.5, 3.5, right? That's the revenue multiple. If that is the revenue multiple Warby Parker is trading at, how can Lenskart get that kind of revenue multiple, right? 3x, 3 to 5x as compared to 18, right? 18 is just next level, right? It's just unbelievable. It's funny. It's hilarious, right? So what you do is you look at the revenue multiple. Then you find out if Lenskart is actually doing something to deserve that revenue multiple. Maybe it's a tech company. Maybe it has invented teleportation, right? Maybe it has invented time travel, right? In that case, that revenue multiple will be justified even if earnings are not that tight. So you look at the kind of operation once again. What is Lenskart doing differently to deserve that kind of revenue multiple? Because earnings are non-existent, right? So if you look at Warby Parker, it also had a negative fiscal year last one. This one started being positive. The same is the case with Lenskart. Negative fiscal year, this one still negative or barely positive, and now it's going to be positive is the hope, right? Similar play. So Warby Parker 3x, this company 18x. So you imagine, I'm being very kind when I say 4.5 to $6 billion. It could go, if things go bad, it could go anywhere. But my point is, you try and find out why this company, and if you find out that there's no good reason why this company deserves this kind of revenue multiple, that's when you go short on the company, right? That's when you find out that, oh, these guys are trying to loot me. Right? So this is very simple. Now, Warby Parker is one company, clear comparator. You go to ArcelorLuxottica, right? 6% growth rate, which is not that great, right? But 6% growth rate at a scale of $25 billion. That's what ArcelorLuxottica is. So growth rates might be different, right? Very different. So growth rates might be different, but look at the scale. Will Lenskart be able to grow at, let's say, 17% or 12% or 28% at $25 billion revenue? Right now, it's at $500 million revenue. And that's when its growth has slowed down already. So it's at a growth rate of 17% at a scale of 5,000 crore rupees. Do you think it will be able to grow at 6 to 8% at a $25 billion play? That's why SLR Luxottica are valued at 3x, 3.5x or something of that sort. Okay, so, but then you look at Titan, which is a jewelry play in India, right? Titan also has Titan Air Plus, Tanishq, and all of these people, the Carrot Lane guys, and so on and so forth. What is Titan's revenue multiple? It's at a revenue multiple of 6, right? But Titan is 10x the scale of Lenskart. 10x the scale. So it has about 40,000 crores in revenue, if I'm not wrong. 10x the scale, but double the growth rate. Double the growth rate. So 70%, 38%, right? Double the growth rate. Good profitability profile. It made like somewhere around 5% net. That's Titan. 5 to 8%, and I'll have to check. But you'll find out. Okay, double the growth rate, 10x the scale, 6x multiple. There's this company, 1/10 the scale, uh, half the growth rate, and 18x revenue multiple. So do you think even now, if not 18x, so now they've come down to 70,000 crores. Okay, 70,000 crores is essentially 16x, 15x, 15, 16x, right? Does it still make sense? No, it's clearly overvalued. What would be the right valuation for a company like Lenskart? So sometimes you got to go cross sector, okay? Because there's new economy, because the whole sector is new, because the internet boom is new. You look at a company like Zomato, which is a tier 1 gold play, right? Proxy of Indian consumption, right? Very, very highly valued, $30 billion and so on and so forth. You look at when Zomato was going IPO, it was valued at about $7 billion. What is Zomato's price to earnings? What is Zomato's revenue multiple? And then you compare it with Lenskart. No, that is the last resort. Never do a cross sector comparison, because everything is very different. So you've got to look at when you're looking at comparing companies, you've got to be very, very sector specific. But if you have to do that, go to Lenskart and then go to Zomato and then find out if these companies are fairly valued. You will find out that even Zomato is undervalued when it comes to Lenskart as compared to Lenskart. So just imagine, folks. And I wrote this, nobody else did, right? Everybody touted the company in a very, very big way. And I called bullshit, and I'm proud of it. I'm actually proud of it. So this is great, right? This is awesome. And because I could do that, now they've revised their valuation by $2 billion. So basically 18,000 crores have been saved of retail investors because of, one piece of literature. So if you look at Urban Company went out with a revenue multiple of 13, right? A lot of people thought that was expensive. And I said, no, it is not expensive, because you don't have a peer of Urban Company. There is no peer of Urban Company. Okay? Not internationally, not locally, not nationally. There is no peer of Urban Company. What that gives is a special credence to a company, right? They have a new product line coming. So they're not just in services play, because now they're making water purifiers or whatever, right? And they have their own sales force, 50,000 people. That's awesome. So they have new growth prospects which have barely scratched the surface, right? The whole water purifier game is 100 crores. And they have like 50,000 feet on street people who are going into people's houses and talking to them, right? So imagine where that business could go without being dependent on the whole play. And when the company got IPO'd, it was valued at $1.7 billion. Okay? $1.7 billion. Now the company is valued at $3 billion. So I wrote that article. The company's IPO went on and people doubled their money. Whoever invested in that IPO doubled their money, right? Now, am I saying that Urban Company is worth $3 billion? Not directly, right? But I mean that company has real prospects, real value, which is not to be found anywhere else. So let's say if you are looking at the Indian economy, okay, you want a new proxy for product domestic consumption. Where are you gonna go? You're gonna go to Zomato, because it's food delivery, it's new age quick commerce, right? That's gonna be proxy of Indian consumption story. It'll not be HUL, it'll be Blinkit. These guys, Zomato, Eternal, whatever. They are the proxy of Indian consumption story now. Okay? Product consumption. Now my question to you is, if you want to have a similar proxy for service consumption, where would you go? That's a question. Do you have any company to go to if you are trying to look at the service consumption of this country, right? No, it's just urban company. So you are looking at a company which is representing the Indian domestic service consumption, home services, right? Which is a huge play, which is huge, right? The possibilities are enormous. So what Lenskart could have done in order to be nice, right? If they were nice as let's say urban company folks, which is very hard by the way, but if they were so nice, what they would have done is they would have done their IPO at the valuation which Fidelity has marked to them. So Fidelity has valued Lenskart at $6 billion, which is a fair value. Okay, they would have valued themselves at that, or maybe less. They would have valued themselves at $5 billion, given no downside risk to retail investors, right? Almost virtually no downside risk, and then taken the retail investors along for the ride. If they were worth $10 billion tomorrow, retail investors would have benefited. But no, these people didn't have that class, and they still don't actually, unfortunately. It is what it is. So, but anyway, the downside risk has been capped a little, which is beautiful, right? Which is amazing. Which is amazing. So, I have one finishing thought for. I'm just missing it. I just lost my train of thought. But yeah, maybe it was Aether. So Aether is another story in that domain. So we'll wind up this story now. Some comments, a lot of comments. Mr. Weber Manocha says, Mr. Sumant Kumar says, thanks for the simple explanation. Mr. Weber Manocha says, makes sense. It would then be better to buy it after the Lenskart IPO hits lists at a lower price. Mr. Abhishek Sharma says, good morning. Very nicely explained. It looks like Lenskart just wanted to fetch as much money as possible riding the IPO wave. Mr. Tushar Tiwari says, do you not worry about the court cases that these companies can file? It's good individual journalism or citizen journalism. Mr. Manjunath Madhabal says, I want to know when you call bullshit on these new age startups, do you get online offline character assassination attempts on you? So this is huge. I'll tell you something. First of all, addressing Mr. Tiwari's question, there is no. I come from a family of 4 generations in law. Okay, so I know law very very well. I'm basically born and bred in a legal environment. So I know when court cases can be fulfilled and court cases can go through and when they can't. It's just I know that part, right? Also, I have free lawyers when it's basically my house, right? So that is for the legal threat, because I don't give a shit about legal threats, to be honest, because I know my ground. My legal coverage is that I'm only working on publicly listed information, okay, and I'm only drawing parallels basis publicly listed information. So I'm not creating information on my own. So when I wrote about Oyo, right, when I wrote about Lenskart, when I wrote about Ola, whenever I wrote about any of these companies, I didn't invent information. There's no misinformation. There's no insinuation, right? It's just publicly listed information, very deeply deciphered, right? That makes me clear because I didn't invent this information, man. Look, if you want to sue somebody, go to Economic Times, right? Or anybody else. Secondly, does it cost reputational harm or let's say problems with my entrepreneurial career? Yes. Yes. So, it basically also turns out to be a positive news, because whenever I'm calling out this play, good people from the ecosystem respond to me. That's the beauty of the situation. Good people of the ecosystem come to me and they praise me, right? And good people are very few in numbers. So let's say the ratio is always 1:99 or maybe 2:98, right? Good people are very few, but those are the only people I care about personally. So if I'm talking about, let's say, writing an article, which a damning piece of article I wrote. So one investor told me that, hey, you are pitching to Titan, you're talking to Titan. And I said, yes, sir, I'm talking to Titan. I'm trying to talk to Titan. And they said that, hey, man, you wrote a lot of damning pieces on Snapdeal. How do you think that conversation is going to play out? Right? And I was like, yes, sir, if that comes up, it'll be a bit awkward. And he laughed at my face and he said, no, it's not going to be awkward. It's going to fuck you. Oh, I'm sorry. It's going to screw you up. It's, it's going to screw you up. It's just going to be funny, right? And he was right. He was right. So sometimes it turns out to be a bad exercise. Basically, some people are very, very powerful. When you're writing about somebody, they can literally do a lot of things, right? But a lot of good people also get attracted. Uh, like when I wrote a piece about some company called Apna, Vijay Shekhar Sharma sir added me. So that's the kind of pull that you draw when you do intelligent, well-meaning analysis. The only thing that to be very, careful about is that you're not being sensational just for the sake of it. So I don't want clicks, right? It's not my daily bread and butter. I'm not a content creator. So I don't care about clicks. I don't care about reach. I don't care about likes and shares and shit like that. I'm not that guy, right? So if I'm sharing an analysis, it's with the good intention of sharing a valuable piece of information, things that should be known but nobody is saying, right? That is the motivation, right? If that motivation is pure and it's good, people somehow find that this is what the guy means. He doesn't mean he doesn't have ill will in his art, right? He's not trying to screw something up just because he wants to, and so on and so forth. He is talking math, he's talking good, positive stuff. So it might sound that I'm like literally chastising VCs or let's say, abusing them or whatever, shitting on them, people say, but it's not. I'm pointing out a very clear flaw in the system which hurts every entrepreneur, not just me, but every entrepreneur. And good people recognize that, good people appreciate that, good people actually go out of their way to help me, right? Because they liked what I wrote. So a very, very good founder. You can guess. I won't say the name right now because it's not nice at this moment. But the founder of my most favorite company from the Indian startup ecosystem, let's say, right? He's invested in us. He's invested in me. He's backed my company, right? And why? Because the stuff I wrote or write, it appealed to his intelligence, and he's the best person in the ecosystem. And that sort of is a very good validation that you're not attracting everybody. Of course, you're making some enemies, but you don't want to make enemies. You're trying to put in information, and with that good piece of information which nobody else is saying, somebody is coming to you, right? And those are the people you always wanted to come to you. So that is a good draw. Some comments. I want to know, Mr. Weber Manocha, right? Does this need SEBI registration? No, no, no. I'm not giving stock tips to anybody, right? I'm not a finance influencer. I'm not talking about growing your portfolio. I've never done that. So Thinkers Frequency, I could have been, right now there are 15 people on YouTube and some 6 people on LinkedIn. This could have been 150 or even 300 or maybe 1,000 if I was just discussing stock tips, right? But I don't do that. And I could have done stock tips. I know how to analyze companies, right? Very well. Very well. I know how to analyze economies. I know how to analyze, companies. We've done this in the past. You've seen our track record, but I don't do that because that comes into SEBI's play where you're trying to be a sort of a financial advisor, so to speak. Sanjeev sir, says Mr. Sumant Kumar. Well, आपके मुंह में घी शक्कर दूध दही, but I won't say anymore. But moving on, folks. So this was a huge rundown on Lenskart. We've exhausted most of our time, so I'll try to be very, very quick with whatever I say next. There's a lot going on in the world. Yesterday there was no news at all. No news, right? There was no news. Now there's a lot of news. So if you look at US, China, US is trying to be friends with every South Asian country in order to hedge its risks against China. So it's talking about how Malaysia, Indonesia, and all of these countries, Donald Trump, Mr. Trump is trying to get things in order because now there comes to a meet with President Xi. That meet is not gonna be consequential. It's not gonna change a lot, but it's very important. It's not supposed to screw anything up, right? And what Trump has realized is that US doesn't have any chips. US doesn't have any chips, right? What I mean is that it doesn't have any leverage against China, and it has realized it. All it has is its domestic consumption play, which is not really a leverage because for that domestic consumption, it's totally dependent on China, indirectly or directly. But China, in a way, has gathered all the leverage all at once, right? With the whole rare earth play. Now, India was trying to make its own rare earth scenario, right? You remember the 7,300 crore scheme that India laid out? What China has done is that it has blocked the machines which should be used or which ought to be used to harness those rare earth minerals. So, first it blocked the rare earth minerals itself, the magnets and stuff. Then it went ahead and blocked the machines. That's the second level of escalation. Now, you ask, then what did Mr. Modi do in the talk? Nothing. I mean, nothing happened, right? Not only did China block the rare earth minerals, it has actually started blocking the machines which are necessary to harness rare earth minerals in different mines. So now India will have to go to Japan, go to some other countries, maybe Europe, to find those machines, and it sort of screws everything up, right? Because these machines are very expensive, and as expensive as they are, it's not going to cut it in the original 7,300 crore budget. So it's a bit of an issue, right? That is what China is doing to the whole world. Yesterday we discussed Madame Ursula von der Leyen talking about using all tools necessary to handle the China rare earth mineral situation, right? Then there's Donald Trump, of course, who has gotten very, very alarmed with the whole rare earth mineral situation. Rare earth mineral situation is just one of the many leverage points that China has, right? So US has sort of realized that the 100% tariff that they were threatening on China, they go out of the window because US will itself go into depression, right? If it goes into depression, everybody holding gold will be very happy, right? But US, of course, won't be happy. So that is what's happening with US, China, Europe, India, and everybody else. So the whole Asian group, ASEAN, right? That is being quoted by Trump as he prepares to meet President Xi from China, right? Speaking of, we've already talked about US, China, India, Europe. Russia and Ukraine's war is showing no signs of slowdown. No signs. Russia has again, drone assault. Russia and Ukraine war is an all-drone war. It's an all-drone war, and what it has shown the world is that drones are not the future; they are the current. They are the present. Yet, India's defense is focusing on fighter aircrafts even now. Well, I've written that, and I consider that to be my next big play, right? When it comes to, let's say, predicting things or something of that sort. Uh, I'll be very happy if my articles or my pieces or whatever they somehow reach that place and government reconsiders its own whole fighter aircraft play and starts allocating all that money and more into drones because drones are everything, right? And that this particular war proves it. So it's huge whatever is going on in the world. And gold, speaking of gold, there is a conference of gold. People are very bullish on gold. So as soon as gold dipped 6% and now it's sort of clipped at 5%. So gold essentially lost just 5% of its peak, absolute peak. And since then it's been stable and it's basically a straight line if you look at GLD price, right? A lot of people are thinking about what can happen to gold next. So people are saying that people were very bullish back in 2011 right? When gold was at its peak, 2000, and and then gold fell and didn't rise until that point until that, up to that price point for 9 years. So that's what I told you. 2011, 12, 13, that's when gold fell, right? And it fell like this. I drew that graph for you if you remember. However, every situation is different, right? So if you look at that situation, that was when zero interest rate policy was kicking in. It had kicked in and there was a lot of growth across the economy. So it made sense for people to pull out money from gold into emerging markets. China was growing 20%, right? So it was just huge whatever was happening in the world at that time. Right now the world is not at the zero interest rate policy play, right? And gold will according to me, it has a serious value to offer, and that's exactly what's happening. So people are rushing in to buy gold because it has fallen. So if you look at Japan, Kyoto, if you look at India, if you look at all the markets, right, they're just cracking on gold, and it's awesome whatever is happening in the gold market. But everybody's trying to play the cautionary play by saying that hey, it was up in 2011 and then it fell and didn't come back to those levels for 9 years. Well, that's okay, but every case is different. You know what we talk about when we talk about analogy thinking, right? So analogy thinking is a bad play. Uh, History is supposed to tell us first principles, not patterns, right? We're not finding patterns, we're finding first principles, right? That's why we study history. And according to first principles, gold is extremely important right now. Why? Because the global economy is extremely fragile, and global economy's fragility will manifest in screw up, a total screw up of dollar, a total screw up of the financial system. I mean, when I say total screw up, I mean something like a reset, right? 29, 87, 2000, 2008, whatever you can call it, right? So that kind of a play. If that happens, you know what happens, right? Gold picks up. Moving on, folks. Isn't peer based comparison analogy thinking? Says Mr. Weber Manocha. No, it's not. It's not. So, what you are trying to find out are the first principles. So, you are finding out how is a company supposed to be valued, right? Now, a company is supposed to be valued in a market. Market is demand and supply. Demand and supply is basically how something is priced. Like this cup should be priced. How will you price this cup? You will price this cup according to its innate value, of course, how valuable this cup is to you. Because I won't sell this cup, right? This is a cup which has been gifted to me by a viewer of Thinker's Frequency. So it means a lot to me, right? But if it cup was in the market, it has to be benchmarked against other cups. So that's not analogy thinking. That's basically fundamentals of valuing something according to demand and supply. It's basically finding out where to park your money according to as per the options you have. So no, it's not analogy thinking. What you're looking at is where to put money. So fundamentally, it's a valuation exercise, right? But some people, what they do is they make it an analogy thinking. That company got valued at 100 million. This company should be valued at 100 million, right? And that's how a lot of herd thinking sort of plays out. We don't do that. So if you heard the entire analysis that we did, we talked about company, profitability profile, growth rate, the kind of industry it is, the kind of operation, future prospects. Then, you look at peers and so on and so forth. I hope it clears it. Moving on. So India has done the AI labeling thing, right? Where videos of AI need to be labeled as such so that people can know that this is not real stuff. Now it's causing a lot of global shakedowns. People are thinking this is a good idea. We should do that. We should do that. So a lot of global tech reviewing AI labeling mandate as India curbs deepfakes, right? And they're thinking about taking this Indian operation across the board. So they're thinking of taking this regulation far and wide beyond India. Just 1 second, folks. Yeah. So that's what's happening. Very important. Very important. Moving on. IT sees pockets of H2 recovery in US, EU as BFSI revs up. So obviously, IT has BFSI clients. IT has a lot of money coming in from banking. right? European banking, American banking, and so on and so forth. And that sector itself is sort of looking green. Interest rates coming on. Europe has obviously cut their interest rates and so on and so forth, and a lot of other factors leading to some action in banking, which is leading to some more discretionary power amongst those companies. If those discretionary spending ability, if that discretionary spending ability sort of picks up, it'll be good news for IT, because they'll be able to renew their contracts, right? And they'll be able to earn their bread and butter. So that is good news in the short term. Let's see how these deals shape up, right? Healthy bookings help offset the lingering pressure from telecom, retail, auto clients, right? So banking looking green, so its vendors look green. That's how it happens. But of course, a lot of action from the AI play, which I've been talking about. So IT is not green as per my analysis. For even if it makes money, even if it starts going well, the stock way, the risk, I'll say, the systemic risk of IT is, in my opinion, very very high, right? Very high. Moving on, folks. AI driven cybercrime threatens India $5 trillion dream. Country is the prime target of AI wielding crooks due to weak corporate security. Well, that's obvious, right? Cyber security, by the way, is a very, very green area. Has always been, will always be. Cyber security essentially just keeps reinventing itself, right? Because with every tech wave comes a new set of security problems, and those new set of security problems become offer new set of security solutions. So cyber warfare or cyber technology is much like drone technology. It is no limiting factor. It just keeps going up, right? It goes up. So when you make a drone, the counter drone technology needs to be good. When the counter drone technology is good, the drone technology needs to kick in. When the drone technology supersedes the counter, so there's no limiting factor. It just keeps moving. Both of the waves move like this, right? So in many ways, that is going on. Very interesting. So of course, as India deals with the cyber security play, much of it is MSS. So viewers of Thinkers Frequency, remember MSS, right? The Chinese intelligence agency, the biggest in the world. People don't even know about MSS. People know a lot about CIA because of Hollywood, right? But people don't know that the actual money lies with MSS. The actual power lies with MSS. MSS is the shivs, as they speak. Moving on, folks. So, India, there's a comment, a big one, by Mr. Manjunath Madhubal. With autocracy expanding, global risks rising, and deglobalization accelerating, gold safe haven appeal is likely to strengthen over the next decade, says Mr. Manjunath Madhubal. Well, absolutely, well put. Very succinct, right? Moving on. But I'll offer you the counter view. The counter view is, Mr. Madhubal, if the global economy is at risk, right? The antidote to the global economy risk is growth. If the global economy, especially US, if it can find a way to grow like before, right, and offset its debt risks, then gold will lose shine. I'm just offering you a counter perspective because we don't want to sound one way, right? So what happens if tomorrow AI and robotics proves to be as valuable as the projections, or maybe even more? Then people will put money out of gold and into AI and robotics. First principles, think about it. You are making money. Your job is to make money. You have, let's say, 10 lakh rupees, right? Those 10 lakh rupees are right now invested in gold. Gold is static. Gold is growing in whatever way it's growing. And then suddenly you see startups making money hand over fist in AI and robotics, and everything starts going so up that you can't imagine. They are actually making money. They lead to cancer cures and teleportation or whatever. You can time travel. They invent all of those things. People are supposed to, everything starts changing. So where would you put your money, right? Would you still be invested in gold? No. You'll take out the money, right, from gold, and you find a bet which is aligned with the whole AI robotics play, if it works. But at the same time, if nothing happens in AI and robotics, with all the trillions of dollars going in, nothing happens, right? then you'll be very happy if you held the gold. So that's how you think about these things. Moving on. World plugs into India. Good news coming in from India, of course. iPhones led shipments up 42% year on year by value, may surpass petro products. So awesome. So awesome. So in 2000, uh, yeah, just 1 second, folks. So there's a lot of action happening when it comes to electronics manufacturing and electronics exports. So we are going to surpass the petro product exports. Isn't that awesome, folks? Isn't that awesome? And what do you think is responsible for this? Number one, there are options, there are hints. What do you think is responsible for all the business beauty that is happening in smartphone manufacturing and manufacturing in general in India? What do you think is responsible for it? We've talked about this. Viewers of Thinkers Frequency know, right? Better than anybody. Some quick answers, please. What do you think is responsible for the whole manufacturing smartphone paradigm in India? Political will, says Mr. Sumit Kumar. Exactly. Political will. All business outcomes are mostly the result of political will. 2017, smartphone thing began, right? Mr. Abhishek Sharma says political will, correct. And only because of that, we have smartphones being made in India, right? And only because of not just so a very intelligent comment by Mr. Manjunath Madhubal. He says China plus one strategy. That is also political will. So it's political will that led America to decouple from China, right? Which led to the whole geopolitical order looking at China plus one as a strategy, which led to a lot of money coming into US. So political will squared is the reason why India has a vibrant smartphone manufacturing play, which is even now not really manufacturing. Our value addition is very less. We need to work on design. We need to work on a lot of things. But at least, we are putting it in a box now, right? Which is something we didn't do earlier, right? So number three, a lot of good stuff happening. So number one is engineering goods. Number two is petroleum products. And number three, electronics. Smartphones might just get a little more expensive because the constituent components are getting more expensive. The input costs are rising. So middle of the road smartphones might rise in price, which is okay, right? Very crazily, Mr. Noel Tata and others are not looking at abiding by Mr. Mehli Mistri's, board approval. So that is shit is hitting the fan, folks. Mr. Mehli Mistry had written that he's okay with the appointment of Mr. Venu Srinivasan in the Tata board if his renewal is approved by definition. But if his renewal goes out of the window, he is not okay, right? So Mr. Noel Tata is looking at not doing that, not going ahead with that, which is very, very scary. Whatever happens with this group is going to have very, very big ramifications for the country. So let's hope that nothing bad happens, right? Moving on. FPI optimism at over 3-month high. Unprecedented selling this year. FPI buys 1,800 crore shares in October. So October is going well. It is almost net level positive, right? So the first time in a lot of months, FPIs have turned green, which is good. But India as a market has been very resilient because of retail market participation. So that stays. And if that retail market participation starts getting spooked and goes to gold, then you're going to look at very big problems for the Indian equities, because Indian equities have been basically standing on the legs supported by the retail investors. Moving on. Big hit for e-commerce companies, right? Good show on quick commerce, good show on e-commerce, a lot of stuff. So that's awesome. Speaking of which, awesome folks, I'd like you to, at the risk of repeating myself, I want to remind you to share this, whatever, however you can, WhatsApp status, LinkedIn writings, whatever you can do it. It needs to grow. The effort needs to grow, and it needs to be sustainable, right? So it needs to grow in order to be sustainable. That's what I meant. And I was thinking about moving forward with that vision of having Thinkers Frequency viewers on board. So what I'm thinking about is having sort of a contribution kind of a fund where people can donate. I'll donate something. I mean, I'll put something in. Some people can put, uh, you know, looking forward to being a part of the team. Yes, exactly. That's what I was hoping for. So we put in some money, right? We get somebody to kind of an intern kind of a person who makes these short videos. That's gonna be how this thing grows, right? Whatever we say, if we put it in short videos, we're gonna put them out. I can't do that. Nobody can do that. But we'll have to put in somebody who can do that. So a short fund for that per month, right? And then of course the StreamYard subscription thing that I can manage on my own. So let's say the StreamYard $30 I take care, but something like a $30 thing, if we can put it together, it'll be awesome, right? So we'll be able to grow this by leaps and bounds. So even if you share a lot, it won't really grow, right? Because your reach is limited, my reach is limited, your reach is limited. So even if we try our best, we write articles, it's great. It's not gonna grow that way. The way it's gonna grow is when we have short videos being put out, right? So we need somebody to actually put out short videos, label the data, and so on and so forth. So more people can discover this, and for that we'll need some money. I'll obviously not put in all the money, but I'll be happy to contribute if others are happy to contribute. So we can think about that, right? Moving on. But it's not necessary. We can keep it as a fun operation. No need to grow. No need to do that. But sustainability might be a problem in that case. Moving on. But that's an idea I was thinking. So good e-commerce jump, 27%. So if you remember, e-commerce was looking at a 30% jump, right? But it came out to be 27%, which is pretty much in the line of the expectation. I'll tell you why. So GST cuts, you should be able to guess that, by the way. GST cuts, sort of reduced prices. So even if the volumes rose, right, the overall value sort of dipped. So 27% growth instead of 30. 30 was the estimate, which is pretty much pretty good, right? Pretty good. Moving on. SMBC going in Yes Bank, which is nice. SMBC going in Yes Bank is pretty good. We've talked about gold. We've talked about global central banks cut US Treasury bills exposure, increase gold reserves. We've talked about this. Since 2017, banks have cut dollar assets and bought more of the yellow metal. India has doubled its gold holding in total reserves. So India's gold holdings are at $100 billion plus now. Dollar holdings are at 220 billion approximately. So that says something, right? But all the reserve banks of the world are stocking in on gold, which says something. Right? Moving on. Happy to contribute, says Mr. Sumant Kumar. Well, thank you so much, Mr. Kumar. So sweet of you. This is very, very nice. So I'm estimating if we spend something like a 10,000 rupee a month kind of a thing, right? 2,500 goes into StreamYard to get the TV thing sorted, right? That way we'll be able to have the panel thing. 2.5 goes there. I'll take care of that. 7.5 we'll get an intern, right? Whose job is to cut videos and make shorts and put them out, and also label the videos consistently every day, right? So 7,500 will go there, and that will be our marketing. That will be our growth. So what we can do is arrange that 7,500, 2,500. I'm happy to put, right? Rest 7,500 viewers can contribute if they want to, unless we are happy with a small operation. Moving on. Adani Group's long-term bonds continue to interest institutions. So a lot of shit happened with Adani. Again, political discourse, very bad. Adani got a hit job about LIC investing. So if you look at LIC, after our conversation, I actually went and looked at LIC's investments. Come on, man, it's a no case. No case. They are trying to screw with Adani again, right? But its long-term bond continues to interest institutions. Why? Why do you think Adani's long-term bond is continuing to interest global institutions? One reason is, of course, a rating. It's AAA rated and shit like that. I won't say that. What is the real reason, folks? I have talked about this many times, so you know why Adani is a good bet if you are a debt investor, right? Why is it a good bet? I've talked about this. One word, one reason. Before that, it wasn't a good bet. It was getting very risky. Then this one thing happened which made it beautiful, right? Closeness to government. No, Mr. Sharma, no, 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 not closeness to government. This one word, one word. Closeness to government was how it grew. Hindenburg, correct, correct. Hindenburg, says Mr. Sumant Kumar, Mr. Abhishek Sharma. Hindenburg is the reason why Adani's long-term bonds are now pretty, because of Hindenburg, Adani Group essentially pared its debt, became very focused, became very cautious when it came to its growth, planning, right? And it sort of fixed a lot of its problems, the debt to EBITDA ratios and stuff like that. And now Adani is pretty again, right? So Hindenburg essentially did MAGA. It made Adani great again. Moving on. A lot of NCDs, a lot of, yeah, that's cool. I hope I'm not missing out anything. Yeah, no, I'm not. So Adani Group. It made Adani great again. Moving on. Skill financing scheme likely to be unveiled in the budget. PM Kaushal Mudra Yojana. Scheme could be spread out over 5 years. Focus on emerging sectors, right? Skill financing is very important. India is a very, very, badly skilled country, unfortunately, right? 90% of our people have not crossed 12th grade. 50% have not crossed 5th grade in the skill market. So obviously we need a lot of skilling operation, and God bless our country. We are doing a lot in that area, right? So the ELI scheme, employment linked incentive, and the handing over of the ITIs to the private sector. Skill was a huge scam, by the way. By the way, skill industry was a huge scam. Huge scam. Okay, I did a mistake in one of the episodes. I actually named a company. I shouldn't have done that. But companies were having their customers and passing them off as beneficiaries of the skill initiative, 10 years ago. So they were like making money and then making money from the government for doing a job that they were already doing. That's how bad we were. But now skilling is looking better a little with whatever we've been trying to do. A lot of initiatives, long list. We've discussed a lot of them in depth, but that's going on. So if you look at scheme to be called PM Kushal Mudra Yojana, funding used to be high-end skill training. If linked to PM Mudra Yojana, it will allow entrepreneurial loans. Scheme could be a 5-period priority funding. So if you look at Mudra loans are the most successful loan plans that have been taken by the government, right? Small business loans. I talked about Shambhu Bhaiya, the market near my locality. He is a pretty big businessman, so to speak. He had a kabaddi business, which has grown by leaps and bounds thanks to Mudra Yojana. He now has a proper, mill. What is that called? The chakki, atta chakki, right? And so on and so forth. Pretty good business. And thanks to Mudra Yojana. So he raised money. He raised about 16 lakhs from Mudra scheme. So that was awesome. I talked to him and I said, Bhaiya, kaise? And so on and so forth. So he told me how he took that loan. It was amazing. So that is the impact of something like a Mudra Yojana, right? Moving on, folks. India Maritime Week, wind in the sails. We've talked about that. India's maritime sector is the next sector of growth, right? It's one of the sectors. It's not like gonna go 10x in 2 years, but it definitely will grow 10x in 10 years, right? Maritime, when I say, I mean shipping, shipbuilding, ship ports, and so on and so forth. Masgard Dog, GRSE, Cochin Shipyard, all these companies, very, very green. Very green, and they should be green. You know why they should be green? Because we are spending $70 billion every year on just foreign ships, even though we have like a beautiful coastline. It's like a beautiful coastline, right? Seventh largest country, perhaps one of the largest coastlines. One second. uh, India, third largest coastline, or was it like seven? I don't remember. uh, Length of India's coastline is 7,500 kilometers. 7,500 kilometers. India's coastline length, coastline rank. 11,000 kilometers actually. So I can't see where it ranks in as far as the world, but 11,000 kilometers. But even then, we spend about $70 billion on foreign ships every year. That's almost half of what we spend, more than half of what we spend on oil, right? So we got to cut that short. We're gonna have our own ship servicing. We'll have more ports. We'll have our own shipbuilding, and so on and so forth, right? Moving on. So that's going. Port capacity. So they're talking about, 2014 it was 1,400 million tons. Now it's 2,700. So in the last 10 years, the growth has been 2x in port capacity. Cargo volumes again 2x almost, right? 972 to 1,500 million tons. Average vessel turnaround time 93 to 48 hours. 93 hours to 48. That's again half. They've reduced the time to half. Number of Indian flagged vessels 1,200 to 1,500. That's not growth. That's what we want, right? Gross tonnage and so on and so forth. So a lot of action to be seen in India's maritime sector. We need more of this, of course. We need more of this. Moving on, folks. Black money law had a wording which says that people who've invested in overseas assets, haven't disclosed them and said may get penalized, and everybody almost pissed in their pants like, what do you mean may, right? Are we gonna get penalized or not? Because people started screaming, right? This is uncertainty. So about disclosures, how are they supposed to? It's like may is not shall. So there's this little English lesson by Indian babus. May is not shall, right? My God, this is pathetic. Anyway, folks, moving on. H1B clarity offers hope to Indian students. US dreams. Clarifies Highfield will not apply to F1 holders. Move set to revive interests. So of course we said, Indians are gonna leave India no matter what, and of course people will also make it easy for Indians to leave India, and that's exactly what H1B is doing again. So H1B became complicated. Now it's gonna be better. So if you look at the visa office of US, so my cousin works in the US visa play, some foreign embassy kind of a play, and she tells me that the line is like kilometers long. So if you look at that line, whatever optimism you have for the country, it'll just go away, right? People are coming like a day before and they sleep on the road to be able to get ahead in the line, right? And that line is like kilometers long, and all of those people, what they want is to escape India, right? Unfortunately, very unfortunate, but it is what it is, folks. Moving on. Employees are the new internal influencers for companies, right? Are you surprised, folks? There's a news report which says employees are the new internal influencers for companies. This is what I call a bullshit report. Employees were always the internal influencers for a company. Who else was an internal influencer for a company? What do you mean by internal influencer? Come on, come on, come on. Who wrote this? Who wrote this? Employees are the new internal influencers for the company. Come on. Anyway, so Delhi is looking at reviewing the circle rate suggestions, right? Circle rates, when they are high, what people do is they indulge in a lot of black money transactions with real estate. Feedback includes creation of category A premium areas, rate overhaul for farmhouses. So the whole registration of it can be clean. So they are reviewing the circle rates, or at least thinking about it. And speaking of Delhi, poor air quality is leading to some capital worries. So we talked about how much it will cost for artificial rain to make Delhi's air clean, right? And we talked about it's gonna take like 4 lakh rupee per square kilometer, and Delhi is about 1500 square kilometers, right? So essentially, it will take somewhere around 60 crore rupees to clean Delhi's air. If you clean the entire Delhi by an artificial rain, it's gonna cost 50 to 60 crores, correct, Mr. Abhishek Sharma? So that is the cost of keeping Delhi's air clean. So once you have an artificial rain, you can expect like 3 4 days or maybe a week of clean air, and then it will get polluted again. So 50 crore a week, that is 200 crores a month, right? And you'll have to spend this money in 3 months at least, right? October is gone. Let's say November, December, and January. These 3 months will cost you. So 50 crore a week, 200 crore a month, 3 times 600 crores. That's the cost of keeping Delhi's air clean. What is the cost of keeping Delhi's air bad? That cost is very hard to estimate, right? Some construction play, uh, you know, some sort of hospital expenses. Would you cost hospital sort of keep hospital expenses as expenses, or would you keep it as a contribution to the economy? Would you like lower spend on health, or would you care about India has less beds, so less stress on healthcare would be good? How do you weigh the cost of clean air in Delhi, right? You know how much it's going to cost. It's going to cost 600 crores for 3 months to keep Delhi's air clean, right? But how much would you lose if you don't spend these 600 crores is not clear. Ensuring proper adherence to stop emissions pollutions more economical, says Mr. Abhishek Sharma. Well, it sounds more economical, but it's not doable. So if it's not doable, it's not doable, right? What do you do about that? So experts warn of health risks for people despite policy interventions. Uh, Whatever you do to keep the Delhi's air clean, I think it's a good investment. Even if you spend like 600 crores, it's a lot of money, but it's worth it, in my opinion. You don't have to do it every week. Let's do it twice a week, right? So you bring it down to 300 crores, but you do something. But because if not, there's going to be a lot of rich people moving out of Delhi, and with them goes a lot of money. But I haven't done the math on how much it would cost if we just keep the air bad, right? That's a good math for you. If you can do that math, please share and we'll have that TV discussion, right? If you can do a very good math about how much it will cost, we know how much it will cost to keep the air clean. How much would it cost to just let the air be, right? And does the math make sense? If you can write that, if you can do that math, it'll be a beautiful thing. With that, we come to the end of the 154th episode of Thinker's Frequency, our daily mental workout, our daily dose of insights and analysis, which don't lead to paralysis right before we punch in. It's 9:17. We're gonna punch in anytime soon. I hope you had fun. I hope this added a lot of value to you. It definitely added a lot of value to me. It was a lot of fun to me. Before I go, I need to share a very very important research with you. Research has found out for 30 days that being present during sexual intercourse makes couples sexually positive. So they feel heard, they feel seen, and it leads to more happiness. So if you are more present during sexual intercourse with your partner, so if you're not scrolling your phone in the middle of the whole thing, it'll make your partner happy. That's what the research has told me. Now it is something that I would have never guessed. I would have never been able to guess this. And I'm sure you would have also not been able to guess this, right? Because this is something that only this research would have told you. That and this is like a proper research, like SciPost and everything. They observed couples, and for 30 days, I don't know how they did this. How they made sure that they were present indeed, and so on and so forth. So whatever they did, but the point is that if you are looking at your phone while in the middle of intercourse, it's not gonna be good. It's not good. So please don't do that, right? You will not get good reviews. That's very important insight that nobody could have known. I wouldn't have guessed. You wouldn't have guessed. So it was important to share. With that, we should go. Mr. Ashutosh Bhandekar sees Nishant being Nishant. So I need to thank Mr. Bhandekar, Mr. Amrit Raj, Mr. Piyush Sethi, Mr. Vaibhav Manocha, Mr. Sumant Kumar, Mr. Tushar Tiwari, Mr. Abhishek Sharma, Mr. Yes, and everybody else who joined. Thank you so much. It was lovely. I hope to see you tomorrow, same place, same time. Take care. Bye bye.